All right, good morning, trade pros. Welcome to our morning market update for Thursday, June 14th of 2018. This is George from TRADEPRO Academy. And we got the henchmen here as well, Marky and Victorio, just to the side of me. Cold-hearted market killers. In today's morning market update, we're going to talk about a few things, just two primarily. The Federal Reserve's announcement last night. I'll break it down for you in a couple simple sentences. And Mario Draghi from the European Central Bank, the ECB, is also speaking this morning, and the euro is getting killed. It's getting hit pretty hard on the back of some of his commentary. So I'm going to explain to you what he said and why it's impacting the euro this way, and what some trade opportunities are for you as well throughout the session. First, let's jump by taking you through a tour around the world. Get your passports out. We're going to get a few stamps. First, we're going to visit Japan. We're down 1% in Japan. Hong Kong's down 0.9%. China's down 0.2%. India's down 0.4%. Asian markets are weak for one reason. Donald Trump today is set to actually put the tariffs in motion that he's been talking about. So far, everything's been chatter, talk. Today, he's about to actually make them real and implement them. And that's what we got pushing markets lower in Asia. In Europe, at midday, London's down 0.5%, Paris is down 0.2%, and Frankfurt's down 0.3%. So moderate weakness in European markets, but a little bit more stable than Asian. In the United States, Dow's flat, S&P's flat, Nasdaq's down 0.1%. They've since rallied a little bit. We got a little bit of upside here. Yesterday's markets from the Fed dumped initially, and we had an opportunity in our live trading room to trade the short side. We made some really good money in the live trading room last night. We opened up at 1:45 p.m. for our subscribers, and we traded together twice that day, and it was very beneficial for us. Crude oil is up 0.2%, but just shy of the 67 marker. And if we look at it right now, let me just turn around very quickly. I want to see where crude's at. Crude oil, CLE on CQG, so it's above 67. The pit session open was 67.03. Overnight highs is 16, trading at 11 at the moment. There's going to be some upside to crude today. We had a huge draw of inventory yesterday at 10:30 in the oil inventory trade. That was another volatility event that gave life to crude. We see some upside in today's session. On Monday, I told you guys the morning market update that the upside was likely to be the right side for crude for the next couple days, and it's continuing to the upside. So there's opportunities to get long. Market analysis live webinars that we do with our subscribers on Sundays. We set up the levels. That level worked key for a swing trade, and oil can continue to the upside if it breaks and holds. It has broken, but if it holds 67, which is the pit open. All right, let's talk about a few news events. At 8:30, we had initial jobless claims come out at 218,000 versus 223,000 expected. And the 4-week average of unemployment claims is down as well, which is a very good number. Unemployment claims are strengthening, which are actually weakening, which means it's a stronger impact for the economy. That means less people are filing for unemployment, which is good. All right, retail sales today came out at 0.8% versus 0.4%. They surpassed expectation by double factor. If you look at retail sales minus auto sales, which are very volatile, they're up 0.9 versus 0.5%. So strong beat on retail sales this morning, pushing markets and supporting a little bit of the up move. All right, at 10:30, we're going to have the natural gas inventory number today. 10 a.m. at the top of the hour, we have business inventories. And then 9:45, you got the Bloomberg Consumer Comfort Index. None of those will move markets drastically unless there's a huge beat or miss. And natural gas is probably the most volatile event of the day. So we have that coming up. Let's talk about two things. Let's talk about the Federal Reserve and ECB. Draghi is still speaking at the moment. I can hear him in my squawk. Let's talk about the Fed. Yesterday, the Federal Reserve raised interest rates by 1/4 percentage point, 25 basis points. It was a very hawkish announcement. At 2 p.m., it was super hawkish. Hawkish means an expectation for higher interest rates over the short and medium term. And if you look at what the hawkish events were, it was the fact that now the Federal Reserve acknowledged there's going to be 4 hikes in 2018. That means every quarterly meeting from now on, there's an expectation for a raise. They raised in March by 1/4. They raised in June by 1/4. They raised in September they're going to raise in September by 1/4 and December. That's now what's factored in. Before that, we had 3 rate hikes factored in. So the Fed officially acknowledged they're looking for 4 rate hikes on the back of a stronger economy. They revised their statement to say the economy is strengthening. And in addition to that, the outlier of this event was whether or not Jay Powell will host monthly conference sessions, Q&As. And we talked about this with our subscribers leading up to the open. We gave them an in-depth breakdown of what the Fed was going to say and what the potential was for the swing, what the unexpected outcome was, and we got some of the volatility events, and we were able to really just short the market and ride it all the way down. It was really a beautiful thing. Here's what he said yesterday that kind of was very interesting. Jay Powell said he's going to have monthly Q&A sessions. Right now, the Federal Reserve only has quarterly Q&A sessions. And whenever the Fed raises, they raise it in a meeting where there's a Q&A, because if he raises rates, he wants to allow the market a chance to ask him questions so he could answer them to set guidance. The fact that he's doing these meetings monthly means that he's prepared to raise rates at any point. There's something called in the Federal Reserve a live meeting, which means it's a meeting where there's a high chance that they could make a monetary policy adjustment. Now, what he's done with this Q&A is he's made every meeting a live meeting. So you can expect to see a lot of volatility around every FOMC announcement going forward. All right, before the monthly statements weren't really important other than the quarterly ones. Now there's going to be a conference. There's going to be questions asked on a monthly basis. There's going to be a lot more volatility around these Fed events. So get ready to start trading them on a monthly basis. All right. After the conference, or rather after the announcement at 2:30 started the conference, and Jay Powell pretty much was as dovish as possible. He was saying dovish meaning, oh, well, the economy's good, but there's still risks. And yeah, we're raising the rates, but we're not really sure how much more we're going to raise them. He basically talked down the message that came down at 2 p.m. And that's why the market rebounded so sharply. All right. So as he was speaking, markets were bidding up. The stocks were going up. The dollar was getting crushed. He's hawkish statement, meaning interest rates are going up. We're super bullish on the short term of the interest rate announcement and outlook. And then suddenly he starts talking that down. So a little bit of a confusion there. And they trusted him over the report. And what happened was the market rebounded. And as soon as he stopped the conference, the sellers came back in and plowed the market into the close, and we closed on lows. So look for the market to digest this report over the next couple of days. I think there's some downside opportunity as some institutional paper starts to sell in larger quantities. So that's a breakdown of the Federal Reserve event, the FOMC meeting. That's what's happened. It's historic in that he announced a Q&A conference after every single meeting. That was the biggest change. No traders were really expecting them to not hike. Everyone expected a hike. That's not what we were looking for. And being around a group of professional traders, you understand what we are looking for. And that's what we did at 1:45 in our pre-Fed announcement webinar that we did with our entire team. It's a benefit with trading together in a group. All right, let's talk about the ECB. Mario Draghi this morning at 8:30 started a conference. The conference is still ongoing. So if you have a news service, you could expect to hear these updates. He said that first of all, what was expected? The expectation was for Mario Draghi to sound a little more hawkish. The European central bank's at a different stage than the US Federal Reserve in that they're still providing stimulus to the market. They're still buying bonds and providing cash into the economy, and their interest rates haven't started to raise yet. And the expectation was for Draghi to start mentioning that, look, we're starting to look at raising interest rates. The economy's improved. We're going to, start preparing the market for an upward hike cycle. What he said instead was, we undertook careful review of the inflation progress. We did not discuss when to raise rates in his Q&A. So he basically shrugged off this entire expectation for higher interest rates. In addition to that, he cut the 2018 GDP forecast from 2.4% to 2.1%. So him cutting that forecast is a way of saying indirectly, look, don't expect interest rate hikes soon in the European Central Bank. The forecast has been dropped. All right, we're monitoring inflation. Why would we hike interest rates on the euro? And that's the message that sent the euro plummeting lower, and it still is. How do you trade this? Wait to sell rallies into the euro, and I think we got more downside throughout the day. Mario Draghi's conference lasts about an hour, so you got about 15 minutes into this U.S. Open. They did raise inflation expectations for 2018 from 1.5 to 1.7%, and the 2019 inflation expectation was raised from 1.4 to 1.7. So what this means is they expect higher inflation, but they're not talking about raising rates just yet. And the euro does not like that. That means the euro is going to have to sell off because it was already pricing in a potential talk of a raise. So now you guys are up to speed on both the FOMC and Mario Draghi from the European Central Bank's press conference. Tonight we have the Japanese bank. The yen's going to be very volatile. If you guys want to trade in the evening, that Japanese yen this evening is going to be moving a lot because then we have the Bank of Japan coming up this evening and early in the wee hours of Friday morning around 1 a.m. All right, so today, prepare to trade some of this volatility, but prepare to see some whipsaws. Prepare to see some head fakes as this market, I think, starts to transition at this top and start potentially selling off. I don't have a clear sentiment, a clear read on this. I just know that you got to be patient the first 10 minutes. Watch it, and then you'll see where momentum wants to take you. But I am more in favor of selling rallies early on. And if that's the wrong sentiment, I'm not going to hesitate to jump on board on the long side. It's not your bias that makes you money, it's your execution. You guys have yourselves a good day. Manage your risk. Trade like a trade pro. I got to turn around and make some money with the group. See you guys tomorrow at 9 a.m. Thanks for tuning in. Goodbye. Vic, you're a brave man. Thank you, Trade Pros. Thank you, Marky. Appreciate it, brother. Lights are going out, so that means goodbye, YouTube. Catch you tomorrow.